super microcomputers. We got to talk about it. Did they cook the books? Is it a fraud or is it a chance to buy? No charts today because I really want to talk to you about Sun Micro. And the charts are deceiving because the charts drag you into, ooh, I want to take action. But the real important thing to do with Sun Micro right now is to take a step back and think. Okay, I have seen this before. I've been trading in the stock market for 26 years now. I grew up with the new economy. Um, I saw the rise of Amazon and then was the genius that bought Amazon at $6, 1,000 shares in 2021, end of 2021. And then was the double genius that sold them at $8, thinking I was the greatest investor ever and I'm going to buy them back when they go back down to 6. And well, you know where they stand now. So much for that. What I'm trying to say is I've been through this before. And this is a really important point. You have all these young kids on the internet. They're 20, 25. They've seen no cycles in the market. Best case scenario, they've seen The Big Short, the movie, and read a couple of books. They don't know what is going on in the minds of the investors when things happen like they're happening with Sun Micro. And that's why it is important that you have people that you listen to that have been in the markets for at least 2 decades. Why? Because only in this period have they truly seen really every market cycle. If it's 1 decade, they didn't see the financial crisis. They didn't see the rise of the new economy and the boom. And that's really especially the rise of the new economy, the rise of the internet. That's really important with what's going on in the markets now with AI and crypto and completely new technologies, because the psychology doesn't change. That's why charts work, because the behavioral patterns of the people don't change. So the charts work today as they did 20 years ago and as they will in 20 years. Now, they're probably going to go faster. Development is going to be faster because of algorithms and things like that. That's true. But the behavioral patterns, right? The panic, the fear, the greed, buying, selling, that stays the same. So let's get back to Sun Micro. Did they cook the books? I don't know. Nobody knows. Maybe except senior management. And that is the main point, right? Because if people. So, one of the biggest things that I learned on Wall Street is one of the great mistakes that people in the stock market make, especially retail investors, is you have to think when you invest in bigger stocks and you see events like Sun Micro, you have to think like institutional investors, right? Because they are responsible for the big moves in the stock. So think about Sun Micro and institutional investors. They don't know what's going on. Hindenburg Research, which is a reputable short seller that really caught a couple of bad guys in the past years, put out this note on the short on SMCI. Yes, they're short. Okay, so they're short, but that still doesn't take away what that they really dig in and do their homework. Now, if you're an institutional investor, if this report comes out and you sell and you go to your boss at the end of the quarter and say, I sold all my Sun Micro, we're out because we don't know what's going on. Nobody will be like, what did you do? You're an idiot. Everybody will be like, yeah, that's fine. Because risk reward, if you don't know anything, then you better sell. Now, if you hold the stock and what Hindenburg Research said is true, and the stock goes down further, you are effed up the bazoo. So that's why the selling. Not because it's true. I don't know it's true. Nobody knows if it's true. But nobody knows. And when people are uncertain, then the institutions, they rather want to be out of a stock. So this is also important for the bulls here, the SMCI bulls that say like, oh man, this is the greatest buying opportunity. I'm gonna buy. No, you're grabbing a falling. You don't want to grab a falling knife, right? Because there's gonna be no institutional buyers until this is resolved. They don't care if they miss a 10% rebound to the upside or a 20% rebound from the upside. The institutional fund managers, they are thinking, I want to get my bonus. And you know what's going to screw up my bonus? If I hold SMCI and those accusations from Hindenburg Research turn out to be true. That's what's going to screw up my bonus. If I sell and stay away, and there are plenty of other great chip companies, AMD, NVIDIA, that I can play with, I'll be okay. That's what they care about. They don't care one bit about SMCI. So I have seen this before. In Germany, we had something called the new market, the Neue Markt, that was kind of the equivalent to the NASDAQ that the Germans tried to build up back then. Obviously, they didn't do a very good job at it. It completely collapsed down the road. I think in 2002, 2003, it was gone. And you had these young German growth companies that came to market, and the stocks were going off because it was this crazy new economy rally. And those, some of them were basically shady companies. Some of them were startups. Some of them were really good companies. But the stocks went up so much, the valuations became so high that the managements of some of them just simply couldn't produce the numbers with their regular revenues that the market was demanding. And by that time, because they were a public company and everybody was getting rich of stock options, what was more important than the business was the stock price. So, what did some of these companies do? They started cooking the books. And this smells just like it. And this could be the start of something. This could be the start of something because it started with a couple of companies. I remember there was one called Comroad that fabricated revenues that they said they did in Asia. Never did them. Made them up out of thin air. And then there are always these weird transactions where big companies move money from one end to the other, and you don't really know and how they put it in the accounting, creative accounting, they call it. When these things start to happen, we need to watch out. Now, my advice for you, yes, my warning of SMCI was right 2 days ago. It already hit the first double support that I showed you in the charts, but I'm staying away. I'm not buying. There are other sectors that are hot right now that I can buy, that I can get into in the stock market, in the commodity market. Take a look at the soybeans. Take a look at the grains. There's something happening there. Uranium, big story happening there. No need for me to be in SMCI and carry risk that I can't calculate. All right, well, that's it for today. Have a great trading day. Stay safe in the markets. Remember, you don't need to be in every trade. You just need to be in the right trade. Talk to you tomorrow. Bye-bye.